The XRP army. You all need to pay attention right now because billions of dollars have been spent, and the Fed just surprised the globe with some new information that they revealed. This information is for you amazing folks back home. Since you have all likely noticed XRP, I would want to discuss the volatility. Over the past several days, Bitcoin and Ethereum have been bouncing up and down like crazy. I want to discuss what's happening and why this volatility is actually likely to get even more crazy from here. What most of you are probably wondering is, does this mean more downside or more upside? We just saw over $22 billion worth of Bitcoin and Ethereum options expire today, which means a lot more liquidity will be bouncing around these markets. Yes, the volatility is not going to stop. Based on what else I'm seeing, I'm going to delve into it very soon. We'll discuss that shortly. In terms of borrowing, we're witnessing some quite intriguing developments. In actuality, tech firms are taking out loans at a very quick rate. What we're witnessing is that internet firms have raised more than $157 billion in the US public bond market so far this year, the most since 2020. It should go without saying that the 2021 bull run that preceded the all-time highs for Bitcoin, XRP, and Ethereum during the last cycle in 2021 followed a very similar pattern. As you can see, in 2020, technology borrowing skyrocketed. Naturally, there was a slight decline in 2021, but as you can see, this is exactly when we reached our highest points ever. And this makes a lot of sense when you consider it. To put it simply, tech companies are currently taking out loans. That money is being invested. An enormous AI infrastructure is being constructed. You name it, they're investing in blockchain technology. Profits will then follow, which will encourage even more investors to buy these assets, ultimately pushing them to new all-time highs. It goes without saying that the Fed will begin raising rates once more, somewhere in 2026 or 2027, which would cause that bubble to burst since the markets will once more lose liquidity. What I'm basically saying is that I believe it's quite possible that we will reach new highs in 2026, followed by a huge pop whenever the Fed begins hiking interest rates or implementing quantitative tightening. Due to the Fed's reliance on data that is still being received daily, no one, even the Fed, can predict with precision when rates will rise or fall. We can, however, get a fairly solid notion of what the Fed will continue to do by looking at what they are currently saying and the facts. There is clearly a lot of money accessible for tech companies at the moment, which indicates that business will prosper throughout the course of the likely next August. The Fed's favorite inflation indicator, PCE inflation, increased to 2.7% as anticipated. In line with projections of 2.9%, core PCE inflation was 2.9%. The Fed will continue to lower rates even when PCE inflation is at its highest level since February 2025. This basically means that as the dollar continues to lose value, the US dollar is currently experiencing one of its worst 12-month periods in history. The cost of your goods and services will probably continue to increase at a rate that is quite unsustainable, which will encourage even more people to invest their assets. And since the Fed will keep lowering interest rates, it will only get better from here. Therefore, while additional liquidity will come in, the US dollar will eventually have a quite bleak outlook. People must therefore stop using the US dollar. They must enter the stocks. To protect their capital, they must invest in cryptocurrency. As the Fed continues to lower interest rates, and the Fed has stated that it expects to decrease rates twice more by the end of this year, additional money printing will take place as they sell off these treasuries. Another fascinating thing is that I learned a lesson in investing that altered my life by making me a lot of money. Hopefully, when everyone is pessimistic, it will also transform your guys' lives. When everyone else is bullish, be pessimistic. What's the attitude? Now, what are people doing with their money? Well, this is really fascinating. Expert last week, $3.8 billion was sold by individual and hedge fund investors in U.S. stocks. For the first time in 3 months, institutional investors reversed the net selling by selling $1.4 billion. As a result, the 4-week buying average drops to $1.6 billion. After trading at $2.9 billion the week before, hedge funds were also net sellers at $2 billion, bringing their 4-week average down to $1 billion. After $800 million the week before, Retail investors sold 300 million, marking the third consecutive weekly outflow. While Wall Street and the general public are profiting, many individuals are ignoring the institutional level of buying that is currently taking place. This is where you can examine the institutional outflows and net gains, respectively. In other words, because the Fed recently lowered interest rates, the great majority of individuals are selling now, and they are selling much too soon. But most people believe that. The majority of people believe that when the Fed lowers rates, the markets have already peaked. As soon as the Fed lowers interest rates, I will sell. That isn't how it operates. I've talked about this a lot on my channel, but I'm here to tell you that it takes at least 3 months for the Fed's liquidity, which comes from rate cuts and money printing, to penetrate the markets. In fact, 20 out of 20 of the last 20 times. This is essentially a 100% success rate. 20 out of 20 of the Fed's most recent rate cuts. Within the S&P, which is currently at a particular level of all-time highs. 12 months later, the stock market and cryptocurrency market both closed higher for every example we have on file. So if astute institutional over the past 4 weeks, buyers have been purchasing at normal retail prices while everyone else is essentially selling, 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 selling. It tells a really interesting story, in my opinion. Due to a lack of understanding of the fundamentals, the majority of people are currently pessimistic. They are unaware of the impending events and the fact that the money will be returned. Only a very tiny percentage of people are highly skilled in the markets. It is essentially their responsibility to buy, but yes, things are going to get rather interesting. And I believe that many people, including hedge funds, will be caught entirely unprepared. It's likely that only institutions will succeed in this situation. Only a very tiny percentage of retail investors will also experience success. As we entered before, we are aware that volatility is inevitable as all of these options are about to expire. I want to be clear about the short term. The price of XRP can drop to all-time lows. Actually, as I shoot this video, our current bottom support line is approximately 256. Sign up below as well if you haven't already. Much affection. Goodbye.